Over 250 hours. That is at least how long I spend looking at each stock. Now, I also run Speedwell Research, which is an investment research firm that caters to hedge funds, asset managers, and other professional investors. In our research process, I spend hundreds of hours literally reading every single earnings transcripts, annual reports, public filings, presentations, investor days, conferences, whatever there is, I read it all. And the reason why I do that all is twofold. One, I want to build deep conviction in my understanding of a business. And that is regardless of whatever investment decision may be made, you want to have a lot of confidence in your understanding of the business, the potential upsides and downsides. And then from there, you may decide to make a risk. And of course, it's going to be dependent on the price. But the other reason why we do so much research, and especially focusing so much on history, is because when you buy a stock, you are becoming a partner in that business. And don't you want to understand your business partners? For example, when I was researching Axon Enterprises, which makes the tasers, the body cams, and also has a lot of different cloud software for law enforcement agencies, I literally went back to the founding of the business. And that helped me understand Rick Smith, who is the founder of the company, what drives him, his abilities as an entrepreneur, the things that he could have seen and couldn't have seen very early on, where he got lucky, and also where he was kind of unfortunate and was able to pivot. All of that is very important because these are the sort of qualities you're understanding in someone who's basically going to be managing your money on your behalf. When you buy a stock, what you are effectively doing is you are giving that business your money, and the people in charge of that business are now managing your money on your behalf. Now, we usually think of money managers as, investors, the people at Goldman Sachs or Capital Group or T. Rowe or any of these hedge funds. But in the most literal sense, that is not who the money managers actually are. The money managers really are the people that are actually deploying capital back into the business, deciding whether or not a certain marketing investment is going to have a good ROI, whether or not they should invest in certain R&D, or whether or not they should expand internationally. All of these sorts of decisions are basically investment decisions. Now, we don't usually think of them as such, but that is what they are. What they're doing is they're basically doing some sort of research to decide whether or not it's worth outlaying capital today in order to get much more capital out in the future. And so you want to make sure you understand your business partners because these partners are the ones that are going to be deploying all of your capital. When you go ahead and you buy stock in Nvidia or Apple or Google, it is going to be the managers of those companies that decide where the money goes. And sometimes they do an awful job with it. They may burn a lot of money in R&D projects that go nowhere because they're the CEO's sort of pet project or he just thinks the technology is cool. They may blow a lot of money in different areas that will never lead to any sort of positive return on investment. They may also, though, be very savvy with the way that they invest. So what you want to do when you're doing this sort of research process is you want to understand the character of these business partners that you are going to build. And that's not just a question of integrity. What that really is too is whether or not they understand the right balance of when to take risk and when to streamline operations and make sure you're monetizing profitably. When we research Constellation Software, which is led by billionaire Mark Leonard, many people call him the Warren Buffett of Canada because of his investing acumen and also pretty long track record now. You could have seen what he set out to build because he laid it out in his letters over 25 years ago. And since then, he's essentially just been relentlessly executing on that vision. And so the reason why I bring this up is because if you studied his history and then you saw how well he was executing, you could have had much more confidence in future execution as well. Now, that is not a comment on what price you would be willing to pay for this sort of business, because at some point, any price is too high. But that does mean you could have built confidence in the fact that they will continue to execute very well. And that is really important because there's always this sort of debate in investing of what's more important, a great manager or a great business. And when we say great business, we usually mean a business with a lot of competitive moats, things that allow them to earn a high outsized return on capital. However, I'm going to tell you that while both are very important, there's very few businesses that can exist for long without a great manager. Even a business that has incredible moats will eventually become irrelevant if it is poorly managed for too long. And so, because of that, you want to understand the people that are running this business. Again, these are going to be your partners. So, whenever you do your research, you want to go back to history to understand how the business reacted, almost like an organism, to understand how it's going to react in different environments. And you also want to understand who is leading that business, because that is going to be your business partner. I hope this was helpful. If you like this at all, go ahead and hit like and subscribe. And if you have any questions, just drop them in the comments below.